Unraveling Blockchain, a journey through time, innovation, and the future. Today we'll embark on an extensive exploration of blockchain technology, a term we hear more frequently these days, but often understand only on the surface. In this immersive journey, we'll not only define what blockchain truly is, but also dig deep into its history, current global impact, and how it promises to reshape the future. Consider this an odyssey where we'll trace blockchain's birth, understand its growth, witness its disruptions, and peer into its destiny. Welcome back to our channel, The Stuffed Capsicum, where we serve up an enticing mix of educational and entertaining content. Before we can fully grasp blockchain, we need to understand the context in which it was born. In the early days of the internet, the idea of a distributed, decentralized database was already floating around. During the 1980s and 1990s, cryptographers and computer scientists began to recognize the potential of decentralized systems. These systems could be used to verify digital records without relying on a central authority, a breakthrough that promised to change how data and transactions were handled forever. The very first conceptual seeds of blockchain technology were sown in 1991, when Stuart Haber and W. Scott Stornetta introduced a cryptographically secured chain of blocks to ensure the integrity of digital timestamps. Their goal was straightforward: to create a system where document timestamps could not be tampered with. Little did they know that this seemingly niche idea would become the foundation of a technological revolution. The idea of decentralization wasn't new. Since the 1970s, many had dreamt of systems free from centralized control. Imagine a world where financial transactions, contracts, or even social records could be maintained without depending on banks, governments, or other middlemen. It was a vision of a peer-to-peer system where trust was implicit in the technology, not in institutions. But the technology needed to achieve this dream wasn't fully there yet. In the cryptographic community, there was a deep-rooted frustration with the idea that centralized authorities held the key to validating and securing information. Cryptography, mathematics in service of secrecy, was already being used to secure data. Still, the question remained: how could you build a decentralized system that people trusted, one that couldn't be tampered with by any single actor? The answer would come in an unexpected form: a digital currency that not only answered this question, but also revolutionized how people thought about money. Fast forward to 2008, a year that saw a financial crisis sweep the globe, leading to public mistrust in centralized banking systems. Enter Satoshi Nakamoto, a pseudonymous individual or group who would forever change the world of finance and technology with a white paper titled Bitcoin, a peer-to-peer electronic cash system. In this paper, Nakamoto introduced Bitcoin, a digital currency that would operate without the need for centralized financial institutions. But the real genius of Bitcoin wasn't just the currency itself. Behind it lay a technology so powerful it would outgrow its initial use case. That technology was blockchain. Nakamoto's innovation solved a fundamental problem in digital currencies known as double spending. In traditional digital currencies, like the ones we use in online transactions, there's always a risk that the same currency could be spent twice. Usually, banks or payment processors prevent this, but Nakamoto's idea was different. Blockchain would act as a distributed ledger where every transaction is recorded in a permanent, verifiable chain of blocks. Bitcoin users didn't need to trust each other. They only needed to trust the system, which was based on mathematical cryptography. The blockchain, a public ledger distributed across thousands of nodes, ensured that every transaction was verified and immutable. In Nakamoto's system, transactions are verified through a process known as mining. In mining, computers solve complex mathematical puzzles to validate blocks of transactions. Once solved, the block is added to the chain, and the miner is rewarded with newly created Bitcoin. Mining, as a consensus mechanism, ensured that the blockchain was maintained and secured without a central authority. It introduced the concept of proof of work, POW, a protocol that ensures the security and fairness of transactions. This was one of blockchain's defining features. No one could manipulate the system without expending significant computational resources. Bitcoin was the first successful use case for blockchain, but it was only the beginning. Bitcoin's blockchain was designed specifically to handle financial transactions. But what if this technology could do more than that? What if blockchain could be used to store data, run programs, or even execute contracts? In 2013, a young programmer named Vitalik Buterin asked these very questions and began developing what would become Ethereum. Ethereum launched in 2015, introducing a blockchain capable of doing far more than just processing cryptocurrency transactions. At its core, Ethereum allowed for the creation of smart contracts, self-executing contracts where the terms are written directly into code. For example, imagine an insurance policy that automatically pays out if a certain event occurs, like a flight delay. Instead of relying on a company to verify the event and issue the payment, the contract would execute itself once the conditions were met. Ethereum's blockchain would record the terms and ensure the contract couldn't be tampered with. This opened up endless possibilities. Smart contracts and decentralized applications, dApps, created entirely new industries. With Ethereum, blockchain became a platform for a decentralized world, where software could run without the risk of interference, censorship, or downtime. Perhaps the most significant revolution Ethereum enabled is what's known as decentralized finance, or DeFi. DeFi refers to financial services, such as lending, borrowing, or trading, built on blockchain platforms, most commonly Ethereum. DeFi applications, unlike traditional financial systems, operate without middlemen like banks or brokers. These decentralized protocols allow users to lend or borrow funds, trade cryptocurrencies, or earn interest, all without needing to trust a centralized authority. The protocols run autonomously using smart contracts, making them both transparent and secure. Blockchain, having evolved from simply being the backbone of Bitcoin, now stands at the forefront of innovation across multiple sectors. From finance to healthcare, logistics to entertainment, blockchain is disrupting the way we live, work, and transact. Traditional financial systems rely on intermediaries, whether it's banks, credit agencies, or payment processors. Blockchain technology offers a decentralized alternative, where trust isn't placed in institutions, but in the network itself. By removing intermediaries, blockchain drastically reduces transaction times, costs, and risks associated with centralized systems. Imagine sending money overseas. In today's system, this could take days and cost a significant fee, but with blockchain, it happens within minutes at a fraction of the cost. In an era where consumers are increasingly concerned about the origin and ethics of the products they buy, blockchain has emerged as a powerful tool for transparency. By recording every step of a product's journey on the blockchain, companies can offer consumers a fully transparent view of their supply chain. Take the food industry, for example. If a foodborne illness breaks out, blockchain allows for rapid traceability, pinpointing the exact source of contamination within minutes, not weeks. Companies like Walmart and Nestlé are already using blockchain to improve food safety and reduce inefficiencies in their supply chains. In healthcare, patient data is both sensitive and valuable, often stored in centralized databases that are vulnerable to hacking. blockchain can provide a secure, decentralized way of storing medical records, giving patients full control over their data. By using blockchain, healthcare providers can ensure that patient information remains confidential and that only authorized individuals have access to it. Furthermore, it can streamline the sharing of medical records between providers, reducing errors, improving treatment outcomes, and cutting administrative costs. In the digital age, our identities are often managed by centralized entities, like governments or corporations. But what if individuals could control their own digital identity? Blockchain technology enables the creation of decentralized identity systems where individuals, not institutions, manage and verify their personal data. This concept of self-sovereign identity has the potential to revolutionize everything from how we verify ourselves online to how we vote in elections. By using blockchain, digital identity systems can offer increased security, privacy, and efficiency, reducing the risks of identity theft and fraud. The entertainment industry is another sector that blockchain is disrupting. Musicians, filmmakers, and other artists have long struggled to protect their intellectual property and ensure fair compensation for their work. Blockchain offers a way to securely record and track ownership rights, ensuring that creators get paid fairly whenever their work is used or distributed. Non-fungible tokens, NFTs, unique digital assets stored on the blockchain, have exploded in popularity, allowing artists to sell digital works that cannot be replicated. While NFTs are often associated with digital art, they have the potential to reshape the music, gaming, and film industries as well. While Bitcoin and other cryptocurrencies brought blockchain technology into the mainstream, the true potential of blockchain extends far beyond digital money. The future of blockchain is one where decentralized systems touch almost every aspect of our lives, from how we interact online to how governments operate. The internet we use today, commonly referred to as Web 2.0, is controlled by a few powerful corporations. Companies like Google, Facebook, and Amazon dominate the web, controlling how we access information, connect with others, and shop online. But in the future, blockchain could power a new kind of internet, Web 3.0. This decentralized internet would give users control over their own data, enabling peer-to-peer interactions without the need for corporate middlemen. Instead of relying on platforms owned by companies, Web 3.0 would be built on blockchain protocols, where data is owned and controlled by individuals. One of the current limitations of blockchain technology is that most blockchains operate in isolation. Bitcoin, Ethereum, and other blockchain networks don't interact with each other. This lack of interoperability has created a fragmented ecosystem. However, the future of blockchain is one where different blockchains can communicate seamlessly. Projects like Polkadot and Cosmos are working on building bridges between blockchains, enabling cross-chain transactions, and creating a more connected and efficient decentralized world. Blockchain's potential extends to governance. Imagine a future where public records, tax filings, and even voting systems are managed on a blockchain. Estonia, for example, is already using blockchain to secure its citizens' data and administer government services more efficiently. In legal systems, smart contracts have the potential to automate many of the tasks traditionally handled by lawyers. Contracts can be coded into a blockchain, automatically executing when conditions are met, reducing the need for lengthy legal disputes and streamlining processes like property transfers, inheritance, and contract enforcement. Blockchain, especially networks using proof-of-work mechanisms like Bitcoin, has faced criticism for its environmental impact. Mining Bitcoin requires massive amounts of energy, and this has led to concerns about its sustainability. However, the future of blockchain may lie in more energy-efficient consensus mechanisms, like proof-of-stake, which requires significantly less computational power. Ethereum, the world's second-largest blockchain, is transitioning to proof-of-stake with Ethereum 2.0, which promises to drastically reduce its environmental footprint. Additionally, blockchain technology is being used to combat climate change by improving transparency in carbon markets, tracking renewable energy production, and creating new ways to incentivize sustainable practices. DAOs, or decentralized autonomous organizations, are a new type of organization powered by blockchain technology. DAOs are governed by smart contracts, not by traditional hierarchical leadership. Decisions are made collectively by token holders, who vote on proposals and share in the organization's success. DAOs could represent the future of business and governance, allowing for truly decentralized decision-making. They have the potential to disrupt everything from corporate structures to community organizations, creating more democratic and transparent forms of governance. While blockchain offers incredible potential, it's not without its challenges. Before it can truly reshape the world, blockchain technology will need to overcome several significant obstacles. One of the biggest challenges facing blockchain today is scalability. As blockchain networks grow, they can become slow and expensive to use. For example, the Bitcoin and Ethereum networks have faced issues with congestion, leading to high transaction fees and long processing times. Developers are working on solutions to these scalability issues. Layer 2 scaling solutions, like the Lightning Network for Bitcoin and sharding, a method of dividing the blockchain into smaller, more manageable pieces, offer potential fixes. But the scalability problem remains one of the most critical hurdles for widespread blockchain adoption. Blockchain technology operates in a gray area when it comes to regulation. Governments around the world are still grappling with how to regulate cryptocurrencies and blockchain-based applications. While some countries like Switzerland and Singapore have embraced blockchain with open arms, others have taken a more cautious approach, introducing strict regulations that stifle innovation. The future of blockchain regulation will play a significant role in determining how quickly the technology can advance. Finding the right balance between protecting consumers and fostering innovation will be crucial. Although blockchain is inherently secure due to its cryptographic nature, it's not immune to attacks. Smart contracts, for instance, have been hacked, leading to significant financial losses, like the infamous DAO hack in 2016. As blockchain technology evolves, so too must its security measures. Developers are working on ways to make smart contracts more secure, and blockchain-based systems will need to address issues related to privacy, especially in industries like healthcare and finance, where sensitive data is involved. As we've seen throughout this journey, blockchain technology is much more than a passing trend. It's a powerful tool that has the potential to reshape industries, governance, and society itself. While still in its early stages, blockchain's decentralization, security, and transparency promise to empower individuals, reduce corruption, and streamline processes across the board. Yet, blockchain's road to mainstream adoption is not without its challenges. Scalability, regulation, and security will all need to be addressed before blockchain can realize its full potential. However, if history has taught us anything, it's that technological advancements often come with growing pains. So, what does the future hold for blockchain? Will it become the backbone of a decentralized internet, transform industries, and reshape governance? Only time will tell, but one thing is certain. Blockchain's journey has only just begun, and its potential is limited only by the imaginations of those who seek to harness its power. And that brings us to the end of another captivating journey with the stuffed capsicum. Thank you so much for joining us today and being a part of our global community of knowledge seekers. Remember to hit that subscribe button and turn on the notification bell so you never miss any of our exciting videos filled with fascinating facts, surprising discoveries, and a touch of AI magic. Stay stuffed with knowledge by exploring our diverse playlists, and be sure to share your favorite videos with friends and family. We appreciate your support and can't wait to continue serving up a delectable mix of educational and entertaining content. Until next time, stay curious, stay informed, and keep those stuffed capsicums of wonder rolling. Hey, Capsicum crew! I hope you're enjoying our content as much as we love creating it for you. Whether it's unraveling curiosities, diving deep into fascinating documentaries, or unwinding with our bedtime tales, we're always aiming to bring something fresh to your screen. But here's the thing. Making these videos takes a lot of time, love, and resources. From the research to editing, every bit of support helps us keep going, and we want to keep growing and delivering even more exciting content for you. That's where you come in. We've set up a Ko-Fi page where you can support the channel by donating, and every little bit helps. Whether it's a one-time contribution or something small regularly, it goes a long way in helping us create more content and keep the channel thriving. Plus, you'll be directly contributing to the next big video you see here. If you love what we're doing and want to be a part of the journey, you can find us at ko-fi.com with the handle @thestuffedcapsicum, link in the bio. Your support means the world to us, and we couldn't do it without you. Thanks for watching, supporting, and being part of the Stuffed Capsicum family. Let's keep exploring, learning, and having fun together.